All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you. And after hitting a new yearly low, we got to talk about the market bottom. So I have a couple of things to show you. We're going to go over the market recap. I got the plays. I got the keys. I have some very important pretty pictures to show you, but here are the plays that I am holding. Obviously, there is a couple that are not on here, but nothing has changed with my view. I've been saying I'm expecting downside with a little bit of upside, and really that's what you got here. I got a long future today. It totally clapped me, but I am not worried about it. But as you see, I do have some put positions, and after we hit a new low today, I did close out 2 of them. But what I'm trying to say, we have a lot of volatility. We finally hit the lows, and now where we go from here, it is about to get news, but there's some light at the end of the tunnel. So here it is, right off the bat. Shout out to ZH, baby. God bless you. But this is the first thing that we got to start with. It is the crash pattern of the S&P. So number 1, 5 consecutive declines of 0.75 or greater. That has literally happened the last 5 days in a row. And even then, on top of that, today was craziness. Again, we're going to talk about the bonds, but even the Nord Stream explosions, all of this stuff. But there is a lot. But the last 5 days have been awful. A 52-week closing is the second criteria, and then finally another day of any magnitude decline, and well, that's probably going to be tomorrow. But as you see here, it's telling you the 1 month return in 1932, 1974, these were the only other times this criteria was met. The 1 month return was negative, but then in 08 you actually had a positive return, and then if you go 1 year later, every single time it has ended positive. So again, light at the end of the tunnel, maybe potential bottom. Even then, everybody is talking about the bottom regardless. But here's the next pretty picture. We were bringing up the record amount of put volume, and no coincidence, everybody's talking about this now, the put to call ratio. And now that it has breached above 1, if you go all the way back to 2011, there has only been about 8 times where it actually went above 1.1 or 1.0. It's came very close, but never really happened. And if you look at the chart below, you will see there have been a lot of market bounces, but in 2018 it did run a little bit, and as you notice, right before the week of hitting 1, it actually had it just right under. So pretty much now that we've hit the low, people are talking about the bottom. A lot of people are worried about more downside, but now everything from Fed pivot to everything is crashing. In a weird way, it is bringing some light, but we still got a lot of work, baby. So I got the recap, got all of that. I have a bunch of plays, and we got to go over what we're holding, and I'm telling you, by the end of the week, it's going to be crazy. I even have a big surprise, too. I think something's going to happen on Friday. I'm going to tell you in this video, but run it, baby.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
So right off the bat, ladies and gentlemen, I didn't even tell you about the headphones, so I can't even hear myself right now, but it stops me from yelling, so I guess you're getting to visually see it. But right off the bat, key number 1, we finally hit that new yearly low. However, it happened on a day where the NASDAQ and the IWM somehow managed to close green. So it's good and bad, but this is good for now because 1, we got the new low out of the way, but now 360 flat. Everybody is saying, well, maybe we're going to test that. And with all the carnage around the world, some people think we have to test it. So watch out for that. And then 3588 on the SPX, that is going to be another very key level. I think this level will be very stubborn. And even if we break there, remember, we've talked about that 351 level, but all in all, I just want you to know, now that we've hit that low, 360 will be an interesting test, but nothing is as urgent. And now either data leading into it, because before you know it, in the next 3 to 4 weeks, it's going to be earnings, Powell, and then 4 or 5 weeks later, it'll be the midterms. But point is, we already hit that low. There's 2 key levels, and we want to see if we do get that panic tomorrow, the next day, I mean, there you go. You'll see that urgency, and that urgency is all about the panic. But like I said, we're not getting that there. And like we brought up yesterday, just watch out for this 200 week, and I believe it is at 350. 158. But this is the 200-week moving average. And like we said, and as you see on this chart, anytime it has dropped below there, it has either led to a massive bounce, or if it does go below, it does proceed to flush pretty big. So point is, we got that new low. Now everybody's on edge, but it does kind of ease us up. And even in hitting a new low, you have some indexes hitting green, and now the NASDAQ has not hit a new low of the year yet. So keep that in mind. But now coming into key number 2, this is what you have to understand about today. The real issue right now is simply bond volatility. Go look at the MOVE index. It's like the VIX, but the volatility, the VIX for the bonds, that is hitting a crazy peak, and that has moved more than the VIX. If you wanted to track volatility, if you watched MOVE instead of the VIX, you would have been better off. But you got to understand right now, there is a massive amount of bond volatility. Even in the morning, Jeffrey Gundlach, he was like, I'm buying it, yields are high enough, and that eased some things, and it has been a monster sell-off again. I think in the last month and a half, yields have already gone up 1.7 or 1.5. Again, it's 30-40%. It's absolutely wild. But the point is, it's moved a lot, and like we saw with Gundlach and a lot of people are starting to finally get in. But how the bonds move, it is really affecting a lot of things. But now also the dollar, man, he's going crazy, and I want you to just understand, until it calms down, and this is what has people on edge. Yeah, I'm in the ES. I think we're going to play out differently, but if this goes wrong, I'm screwed. Again, and I think a lot of people will be, the put sellers, everybody, but it's just simple. Right now, the bonds and dollars, they are in a very weird, messed up feedback loop. Have you seen Top Gun, the movie Top Gun, and then the guy's mad at Tom Cruise because his dad or some shit, and then he flies the plane above him, and then they do that little spiral thing until one of them's about. That's the dollar and bonds right now. So if you haven't seen that, spoiler alert, my bad. But either way, the point is right now, this is what is going on. Again, until any other events, data, or anything changes that, we are going to have to deal with it, or a lot of people are assuming it's been so bad consecutively, eventually we will get some relief. So that is what we are looking for. And even today, we had very good data. It led to a bad reaction, but I even said it from the beginning of this week. It'll come into the final key. I'm not really expecting any data to move the market. And right now, until the bonds and dollars calm down, I don't think we could get out of this little feedback loop, but it is easy to get out of if it just stops. Easier said than done. So we'll see. But coming into your final key in the data now, tomorrow's going to be a big day coming into Wednesday. We'll see where it sets up. Then that Thursday, Friday combo, that will be it. But we are getting a lot of data. So like I said, you had consumer confidence, all of that did good. The Conference Board of Confidence or whatever it is, and even new home sales, everything did good. We are going to get preliminary PCE, but now I really think the consumer sentiment is going to be the decider for this week. Like I'm saying, we hit the low now. We want to see if there's going to be any more global panic that could cause the trigger to really get us to the lower levels now. But if there's not, chances are it's going to be the data. And I think this data by Friday, consumer sentiment, I think this is the end all be all for the week until we get into next week. And then, like I'm saying, before you know it, all of the bigger data sets are there. But consumer sentiment, it's related to inflation. We've seen big market moves, and this is all I want you to see. This is the chart. Last time, it was expected that the one-year inflation on consumer sentiment was going to be at 5%. It came in at 4.6. Everybody was happy. This month, everybody is expecting 4.6. So if that comes in, I think that'll be a good reaction. But what I'm saying here now is that over the last couple of weeks, you've been hearing it a lot more than usual. Inflation is entrenched. That's what every single person is saying. Even Bullard today, he said we need more rate hikes. But you've probably heard a lot of Fed speakers say this. And really, I think this will be the data. This is what will show it. If this somehow manages to drop and then rocket back up and this goes to a higher number, this will be evidence in the data that literally inflation is entrenched, and I think that will cause the reaction to get us to the lows. But if this ends up being good and we get a little relief in the dollar and bonds stop going ape, then it might be a little bit of a relief until the data with everything else. So I hope you're ready. But Let us get into the plays. So, right off the bat, I have a bunch of plays. We're going to go over the ES and the plan of all that, but let me run through these because I think these plays are kind of simple, and one of them is one that I made today, and I really think you'll like it. So, let's start with it, baby. Number one, TLT and the bonds, but this isn't the big one. I'm not saying this is going to be the 30,000 percenter, the 10,000 percenter. I do think down the road, we will have this play once this kind of develops, but even in the short term right now, there definitely can be a short-term pullback on the bonds. The 10-year is right near 4%, and that's a big level. It can keep going, but any relief in the markets, it could be a very big rally. And what I'm saying with 4%, it's either going to rocket up to 4.25 and then stabilize around 4, or we hit 4 and then maybe we come back to that 3.75 that we were at 3 days ago. So yeah, I don't know. But as far as that play, I am in a TLT put, and this is just another testament to options. I have this TLT 95 put, and I'm up 30% on it now. But here's the caveat, or the kicker. I bought this on March 4th, 2022, this year, and TLT has dropped about 40% since then, and I have 3 months of time on the contract. I'm only up about 30%. So that's where I'm saying I'm watching all this. I'm holding it. So I was like, all right, let's try this. And what play I did make is a /ZN, and I only grabbed one of them at a 111,015. It's priced in basis, comma points. It's weird, but I bought a future on the 10-year bond, and pretty much my plan was, hey, I have this TLT from the beginning of the year. It's operating a little weird. I'm 5% within the money. Bonds are at 4%. I just think we're going to get a big move either way. So by buying that bond there, I could benefit off of a short-term rally and then still hold the TLT, but either way, I'm hoping one of them is going to benefit, but a short-term move in the bonds, this can be a big key. If it doesn't materialize this week, definitely be on your eyes out for it for next week. But again, don't fall for it. You don't have to go so long on it that it's the next TLT short-term relief. But that is play number one. Then play number two, Goldman Sachs and Morgan Stanley. We've been bringing up the banks a lot, but there was news all day about the SEC suing these banks over their WhatsApp disclosures and all of that. More news hit after hours. It's like $16 billion. And I think some got like a $1 or $2 billion fine individually, but there was a sell-off after hours, and then it like quickly bounced, and that has me thinking Goldman Sachs, Morgan Stanley, any of the bank stocks affected, I really think they're going to get more active and respond to this news either pre-market tomorrow or intraday, but definitely watch out for them. And again, all those banks now are getting to a key level. They might be some of the first to break, so watch out for that one. That is number two. And then finally, I like this one. This one's interesting. Rumble. But let's put the volatility to the test. That's why I'm putting it up out here today. Pretty much they had news after hours. Russell Brand said he's done with YouTube. He has 5 million subscribers on YouTube. He said he's exclusively going on Rumble and only going to stream there. But this is what I want to see. We're going to find out tomorrow if good news, external, and depending on how the market plays, if Rumble could kind of ignore the downside and get it some of that trading hype, I think this one could be a good one to look at. And like I've been saying, I wanted a re-entry below $12. Around like $11.70, $11.50. That would be a better price. So gonna be watching it, not committed to it, but like I'm saying, I'm gonna put this to the test, and if this thing comes through tomorrow, I will definitely trade it. So we will see what happens. But those are the main plays. As far as everything else, let's go over what I did today, and this will tie into what I'm holding. I started with that ES. I went long at 3,722.5, and remember, I went long at like 312. And remember, we had that flip, and then I made another one at 3,720, and then got out of it. So it's around the same price I've been buying. We started off in the morning. I was like, all right, I think we might be able to rally with bonds calm down. Bonds straight up sold off. I got absolutely demolished. I'm down $3,100 on it, but like I'm saying, bro, this just, it visualizes what I've been telling you. I think the market is going to go down, and I think we have upside on the way to going down, and that's why I'm holding a lot of the downside. I'm going to take profits into the lows and hold these to the upside with more leverage to get any of the pops there. But it worked against me today, but I'm still holding, haven't taken the loss. This one could turn up either really good or really awful. So we're going to see, but it meets my plan and what I'm expecting. So still holding that one. And then I opened the ZN22. 2. That is the bond future. And then I closed the IYT. I got like $800 net profit on that. Then EPV, we got like $950 profit. And then even towards the next low, once we hit the yearly low, I dabbled with it yesterday. I said, let's try it, man. I want to see. And now that I have that ES, if it does go against me, and after this play I just made too, I am pretty much opening up the door to even add more downside, because now if we do bounce, and I am going to hold these could work for me on the back end towards that November midterm rally. But I grabbed 5 of the ES November futures on the ES. I bought an option on the futures, but I bought them at 675, 5 of them. Max loss is like 1,800 if I'm wrong, so still pretty big, but I wanted to hold it and see where this goes from there. And then I covered the McDonald's from yesterday, made like $300. It was actually a very, very good trade. I was surprised, and then sold the other half of EPV, and then I bought 50 shares of JBHT at 164.05. There was news on Ryder that Apollo is looking to take over them and that they have other suitors as well. So kind of a sympathy play, but I'm down about $1 a share per now. But those were the main plays. Back to what I'm holding now. This is everything that we got. So I have the big future open down 3,000 as well as the option. We still have the MES, so up 2,500, and then the NQ, that one's $500. So again, those are my downside. There's the bond play, didn't move much. The EWG still up on that. JB Hunt is down, and then that Netflix, we are still up. And then I'm pretty sure that's everything. I think I still got like the SMMT is a couple $100. The only other trades from the last like month after all these swings, I have the Adobe down 1,100, and then the Arch down 650, and then UNG and Boyle, those are down about $2,000 a pop now. So that one was big, but I am interested in buying that. And now for the rest of everything, that is going to be the next play. That news today with the explosion, I mean, I'm really down with UNG right now, and Boyle, I mean, I'm down with it, like I'm down on the play, but like I'm down, like, you know what I'm saying? So I averaged last week on the Boyle. I think by this week we're going to see that hurricane is lowering demand for natural gas, and then the explosion is raising it. But pretty much, I mean, I'm just going to every other week, I'm probably just going to keep buying it down until winter, and then we'll see. But this is the volatility. So if you were in it when I was getting into it, you got to deal with the pain. If you haven't now, I think you got a different opportunity, and I would definitely be eyeing it. But I'm still trying to add and stack to those plays just little by little. But I do think now as we start getting into October, but towards closer to winter, those are going to be moving, and I am going to be watching those to see if the news from today kind of plays out on it. But those are everything. It's going to be very straightforward. We got to watch the levels. Dollar bond spiral. If we get a relief, that can calm things down. And then before you know it, that data Friday, I think that'll be the kicker. And then we're really going to see, is it 08, 1930s, or do we get a bounce until the midterms and then everybody goes crazy again? I don't know, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember everything you've been through and the fact that you're here right now. That's it, man. This is what I've been saying with the Morfati. You know what I've been praying? And I've been saying, Lord, just let us not forget what you've already done. And that speaks testaments. Even if you don't believe what I believe, I'm just telling you right now, bro, you got to remember a lot of people have already been washed out. That's all I'm trying to say, for real. If you are in the game, in the market, ready to go and getting excited and not letting this break you, I'm just telling you, you have already made it this far, and this wasn't reserved for everybody. So we got to finish it home. There's going to be a lot of back and forth. Don't get too emotional. Ride it through and just get ready, baby. We got to make it till the end of the year. But Chad, I love you. God bless you. Thank you for all the positivity. I will see you in the morning. Have a wonderful night and peace out. Okay, goodbye. I don't know. And I don't even know if I'm loud or not. God bless you, Chad.